Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Senior Specialist with Index Research and Development at Nasdaq Investment Intelligence, to discuss the GSOX, Nasdaq's Global Semiconductor Index. Mark, it's great to see you. Welcome back to Trade Talks.
Thank you, Jill. Great to be back and talking about this index, which tracks a sector that is just ever relevant over the past couple of years, especially.
Yep, it certainly has been. So, Mark, let's take a look at your first couple of charts here so we can learn what companies make up this index and where you're seeing it in terms of geography and as well as market cap.
Sure. So first thing I'll point out here actually real quickly is that we launched this index in September of last year. It's not to be confused with the SOX index, which has been around for almost 30 years, tracks US listed semiconductor companies only. So this one is a global version. Instead of tracking 30 US listings, tracks the 80 largest semiconductor companies globally. The way we pick those is we look at ICB sector classifications and zero in on two subsectors, either pure semiconductors or production technology equipment. And then we select constituents based on kind of minimum market cap size of 150 million, average volume of about 1 million. There's some ESG screening criteria applied here as well, just for kind of safety to meet European standards. And the last thing I would point out is we just had a tracking product launched on this index from HSBC out in Europe, listed in London, ticker HNSC. So with all that said, here's the high level view of composition. The top 10 make up just over about half of the index weight, about 55.5% versus the rest of the index. So pretty high degree of concentration here. You can see on the right, those top 10 constituents, maybe a surprise to some folks. Intel doesn't even crack the top 5. This index is modified market cap weighted. What does that mean? Top 5 constituents every quarter get capped at 8% max weight. The rest get capped at 4%. That's why you see Intel there quite a bit lower than the top 5 that are made up of Taiwan Semi, Broadcom, ASML, NVIDIA, and Qualcomm. And then on the next slide, we can talk a little bit about kind of the profiles of the companies in this index from a market cap perspective. All the way on the left, you can see that 100 billion plus market cap companies kind of dominate this index. It didn't used to be an industry that had quite as many large mega cap names, but given the performance, given the growth in the sector in recent years, there are quite a number of 100 billion plus companies, 11 to be exact. So just about overlapping with that top 10 constituent outline we gave earlier. 50 to 100 billion gives you another 19% of the index. And then sub 50 billion market cap gives you the rest, just over 20%. You can see that index weight by the ICB subsector classification, it is mostly pure semiconductors, 74%, but a nice 26% chunk of those are those equipment manufacturers. And then in terms of geography, right, or globality, this is still mostly a US index, almost 60% US companies, but then you can see Taiwan, Netherlands, and Japan are pretty nicely represented, and then all the rest of the countries round out. So you've got about a 50-50 split in terms of number of companies that are US domiciled versus international. Some nice geographical diversification versus that long-running SOX index that I mentioned earlier.
And Mark, when we take a look at the GSOX, how has it performed relative to its benchmarks?
So, I mean, you look at long-term performance on this, it's really, really impressive. It's actually beat out the Nasdaq 100 if you look back on like a 10-year basis. What I'm showing here is kind of a divergence, right, between what happened last year. For the full year, you can see GSOX was up 42.6%. That was slightly better than SOX and quite a bit better than stuff like the Nasdaq 100, the NDX, the tech sector only component of NDX, NDXT, and then the S&P, all were around 26, 27% for the year in 2021. So GSOX did about 1.5 times that at almost 43%. This year, you can see on the left, year to date, it's been a pretty tough month for any kind of tech, and semiconductors are not immune to that correction that is going on as investors kind of digest the latest data on inflation, the latest expectations around the Fed rate rise path, getting some hits here in terms of valuation. But the thing to keep in mind with this sector is that you don't have very many companies that are pre-revenue or pre-profit in this sector like you do in other parts of tech, like software. These companies, for the large part, have been around for decades. They have really solidly established business models, and they have basically an unlimited source of demand right now, given all the different components that semiconductors play a role in these days. And that leads us to our last slide.
Right. And that was my next question to you, Mark, as we talk about where companies are in their revenue cycles. Where do you expect these companies that make up the index to derive revenue as we look forward?
Yeah, so if you look at this chart, which has a lot of colors on it, right? This is based on IDC data, and we actually don't have the full year 2021 data yet to split this up. But even looking at 2020 versus 2009, that headline number, right, the top line at the very top of the chart is 500 billion. We actually crossed 500 billion unofficially in 2021. The numbers are just not published yet, but we crossed 500 billion for the first time last year. In 2020 already, you were 100% a doubling of global revenue for this industry versus 2009. And you can see all the different segments in here that are growing quite fast. Automotive is the one that is most interesting because it was such a tiny segment of the overall demand for semis back in 2009, prior to the explosion of EVs, prior to the explosion of things like CarPlay and autonomous driving and assisted driving software. Nowadays, cars have thousands of semiconductors incorporated in them. No surprise that has been the fastest growing segment. It's still pretty small, but catching up to other segments like the consumer segment, like the industrial, energy, medical, and military segment. The other ones like wireless communication and computing still growing really well, even though semis have been a part of those components for many, many years. Both product segments have just taken off in terms of COVID-driven demand in the last couple of years. There's really kind of no let up in sight from the demand side. The supply side, another story that's been part of the reason these companies have been challenged recently, is kind of figuring out all the supply chain issues, so many different logistics to work through when you're talking about a highly globalized value-added supply chain. But a lot of them are kind of forecasting that by later this year or by next year, those concerns will start to die down.
All right, Mark, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.